company also announced it will invest $40 billion through the end of the decade to manufacture chips here in the U.S. Joining us now is Rajvindra Gill from Needham. Likes the stock. Do these warnings come as a surprise to you?
They do come as a surprise. I think we entered into the week thinking that a lot of these companies, Micron or Intel, might have kitchen sink the estimates, meaning that they guided so far below the street. In the case of Micron, there was a 50% cut to the estimates for next year, that the results would be better than those estimate cuts. And then we saw kind of NVIDIA echoing something very similar yesterday, a significant cut to top line and earnings. However, today, with Micron saying that they're going to come on the low end of the range for this quarter, and then the number is going to come in down further for the next quarter, I think that's going to kind of retest that idea that a lot of these semiconductor stocks are kind of kitchen sinking the numbers or clearing the decks. There could be larger estimate cuts than what investors are anticipating, definitely more than the sell side is anticipating.
So are you still recommending these stocks?
I think what we need to see in the case of NVIDIA, because NVIDIA is going to report in a couple of weeks, the same thing with Micron is going to report later this month, is to get a better sense of kind of where we are with the overall inventory level situation, where we are with gross margins. Semiconductor stocks can work in a inventory correction period. We saw this in 2018 when the former President Trump started the trade war with China, and there was about a 4 to 5 quarter inventory correction across the semiconductor stocks. It lasted for almost a year. And we saw a lot of stocks selling off in 2018, the end of 2018. Yet in 2019, the semiconductor index was up 60%. So a lot of the stocks priced in that inventory weakness already, and while the industry went through an inventory correction. But I do feel that there's probably more risk to the estimates than what people are expecting. The weakness in demand has been concentrated primarily in smartphones, PCs, consumer electronics, but it is spreading to the cloud, to data center, and automotive and industrial. We are seeing elevated inventory levels in those markets, so we need to get more clarity on what's happening with those markets.
I think I got it. So you like the stocks, but think there's more downward estimates to come. Raji,
yes.
Thank you very much for joining us.